Good afternoon, teacher. In this opportunity, I will talk about the general sales tax. Introduction. The consumption tax, known as the general sales tax, IGB, had its beginnings in our country through the stamp tax law 9923 as of January 25, 1944. This tax was levied on the total sales price in 1973 by means of Decree Law 1962, the Goods and Service Tax (ABS) was established, which taxed and the sale of goods at the manufacturer or importer level. And then in 1982, a general consumption tax was implemented through legislative decree 190 with a general rate of 16%. Indirect taxes are regressive as they are paid by both rich and poor people in Peru. For this reason, it is necessary to implement a comprehensive tax reform. This proposal is widely known and has the support of the World Bank (WB) and the Inter-American Development Bank (IDB). And the idea is to increase direct taxes such as the IGB, which affect those with lower incomes to a greater extent in terms of percentage of income. Peru is characterized by having one of the lowest tax collection levels in the region, and largely due to tax evasions and avoidance, but in the case of the IGB and income tax IR by companies, and this situation might hinder the achievement of the expected results in terms of improving the effectiveness, efficiency, and productivity of the IGB. The definition: the IGB, known as general sales tax, is intended to tax certain activities carried out in Peruvian territory. These activities include the sale of real estate, construction contracts, and the first sale related to the builders of such real estate, and the rendering of use of services and the importation of goods. The tax is applied only to the value added at each stage of the process of production and circulation of goods and services, which allows deducting the tax paid in previous periods, now as tax credit. These are the main operations subject to the IGB tax. Taxpayers are responsible for collecting the IGB from the consumer and subsequently transferring into the state in connection with transactions that are subject to such tax. Bear of the tax obligation. The tax obligation arises when the taxable event occurs and the performance of a transaction taxed with the IEB, for example, the sale of a product or the rendering of a service. The obligation falls on the seller or service provider who must transfer the tax to the final consumer. Taxable transactions. The operations subject to tax are specified in Article 1 of the sole tax of the General Sales Tax and Selective Consumption Tax Law. These operations are as follows: A. The sale in the country of personal property. B. The rendering or use of service in the country. C. Construction contracts. D. The first sales of the real estate may be the builder's tariff. E. The importation of goods. Non-taxable transactions. According to the standard for the use of the pro rata method, the following non-taxable transactions will be taken into account. A. Those included in Article 1 of the IGB law, the same that are exempted or not taxed. B. The first transfers of goods carried out in well or table of products of the product exchange. C. The rendering of service free or shares. D. The sale of the real estate whose acquisitions was taxed. E. Ordinary or extraordinary dues paid by members of a non-profit association. Exceptions. Exoneration refers to the temporary suspension of tax payments established by the government in office. In recent years, this measure has become a crucial tool for economic reactivation in various regions of our country, granting tax benefits during a specific period. Thank you.